start this session again. This will be a panel discussion, and the theme for the panel discussion is Traversing the New Regulatory Framework for Microfinance, Experience of the MFI so far. So I would request our moderator, Mr. Gigi, sir, Executive Director from Sadhan. Thank you so very much, sir. A big round of applause for Gigi, sir. I would request other dignitaries, sir, kindly take your seat. I would request other dignitaries to also to take place. Mr. Alok Biswas, Managing Director, Jan Kalyan Financial Services Private Limited. Mr. Sumit Mukherjee, Chief Business Officer from Arohan Financial Services. Mr. Partha Mandal, General Manager, NABARD. And the last but not the least, Mr. Narendra Nayak, CEO from OSAFI.
Thank you very much, and good afternoon to all of you. I know most of the people are outside networking, so it's a usual practice. Getting people in the hall will be a difficult thing. Thank you to all of you for being here. In fact, today from the morning we have been hearing a lot about the new regulatory norms and how we have gone through in the last 2 years. Even in the inaugural session there was discussion, some kind of mention about that. Then subsequent to that, when Fire Chat also came, there also the discussion was mainly around that. And even in the subsequent one, where you talked about the enterprise development, there also some discussions had happened. So a lot of things have been done. So I don't think much more to be spoken on this, but then let's once again understand the dynamics of the new regulation from the practitioners. In fact, I'm really thankful to the Association of AMFI for bringing such kind of a panel. On one side we have two practitioners. In fact, Alok is from Jan Kalyan. Alok Vishwas from Jan Kalyan is founder and managing director there. It's a relatively smaller MFI. Whereas we have Sumit from Arohan. It's a big MFI. So we have one small MFI, one big MFI with us, both are practitioners. On my left side I have Mr. Partha Mandal. Partha Mandal is General Manager of NABARD, basically a facilitating and enabling institution, providing funding support to the MFIs, those kind of things. And we have someone, Mr. Narendra, as an Association of Microfinance Institution, is from OSAFI, that is Orissa State Financial Inclusion Financial Inclusion Institutions. So we have views, we'll get views from different point of view. So let's hear from them. Before that, let me just introduce that the new regulatory norms. The new regulatory norms, we all know that it came in March 2022. In March 14th March 2022, it was notified, and it came on operation from 1st April 2022. So almost 2 years is almost completing now. So we have a lot of learnings from that. So let's understand the learnings from the practitioners as well as the funders. As I said in the morning also, see the new regulatory norms, it only RBI has given a lot of freedom to the microfinance institution. They have only mentioned, or they have only said 3 things in the policy. One is that what is categorized as a microfinance loan. Number 2, it says about what is an household. Number 3, what is the repayment obligation for a household. Here the unit is basically a household, more than an individual. So basically that is one change which has happened, that it has taken as a household as a unit. And understanding the requirement of the household and liability as well as the loan needs of a household. That is one thing which has happened. Secondly, there is also a harmonization which has happened across the board. earlier the microfinance norms were, regulatory norms were only applicable to the microfinance institutions. But now there is a harmonization which has happened. So across the board, whether it is a bank doing microfinance or whether it is an NBFC doing microfinance, small finance bank doing microfinance, all have to follow a similar kind of a norm. We have also come out with a code of conduct where all the players, that is banks, NBFCs, MFIs, and SFBs, all have concurred with that. So there is a uniform code of conduct applicable to everyone. So these are some of the things which have happened because of the new regulatory norms. Now let me go to the practitioners first. I'll start with Alok. Alok Biswas, you are from Jan Kalyan. So a smaller player, I would say. So you must be around 350 crore of business, 250 crore of business. So tell me, what is that? See, you have seen the earlier regulation also. You are part of the sector in earlier when the earlier regulation came also. So how do you think? What do you think about the new regulation? What way it has benefited or not benefited?
Thanks, Gigi sir. Very pertinent question. But as you told that already from the morning itself, this thing are going on several locations it came. Of course, this new regulatory regime actually has opened a lot of ideas, and majorly there are 2-3 things for the practitioner it is beneficial. I will tell some deterrent also. But what is the positive outcome is that first one is that there was a cap of this ceiling income level of the customer. Some people will ask that what about the customer? Earlier it was 1,60,000, now it has been changed to 3 lakhs. What is that 3 lakhs? Who is going to fix the amount, whether it is 3 lakhs or it is 2 lakhs, who is going to? It is a self-regulatory organization also there, and RBI also looking at that. When some company is putting 3 lakh rupees and some company is putting 2,60,000, so RBI and Credit Bureau, they are questioning all these things. They are already data part, already people are doing. So 3 lakh actually, you know that India is from the expenditure part, actually we are taking care of that, and this is the positive outcome, I will tell. Because some graduated customer, if you look at the graduated customer, we are talking more than 3 lakhs customer income level, we are putting them to as a MSME level. So many people, so many microfinance companies, especially also that MSME also, MSME lending company, BC lending company, what they are doing, they are doing putting this category to 50 lakhs to 5 lakhs rupees in MSME category. So that is a positive outcome of the criteria, income criteria. Second is that interest pricing. I will tell not interest, it is a pricing part. Pricing has been deregulated, whether we get benefit or not, that is different story, because NBFC and reported so many things has gone up. So actual benefit is not going to the customer. In turn, actually, I will tell the rate of interest has been grown up from 21.75 to somehow 28.75 or something like this. That is one part. But it has been given a positive outcome of the industry as a whole. 60% of the customer, in morning you have seen, I believe you have seen the Microfinance report also, 60% of the borrower is the first cycle borrower. Those who are doing a very good borrowing habit and all this in delinquency level 1 to 30, it is only more than 60% customers in first cycle. So that is a very positive outcomes. So what about the other people? Morning, I believe you have seen the Microfinance report. So this is a good thing that pricing can be fixed, and underwriting policy and whatever things are there, like risk premium, you can fix on this. So that company can be sustainable, even a small company also sustainable in a long way. Slowly, if the benefit is there, slowly it will pass on to the customer, that is there. Third is that FIRE, as I told clearly, the FIRE calculation. That is the income level actually. When we are talking about the fixed obligation to the customer, it has been paid to 50%. But this 50% is compared to all this, whatever the loan you are having from bank, from NBFC, whether it is bike loan or any other loan you have taken from that customer. So this can be taken care of. So that overlending, even that overlending, and I will tell that it is a burden to the customer also, it has been minimized. it has a positive outcome. If you see the portfolio of this last 1.5 years, it has been changed. And moreover, RBI also given another good thing, though it is effective from 1st April 2022, but they have been given a leeway to 1st October 2022. It has been positively effective from 1st October to the effective, through effective, it has been changed. So we practitioners got enough time to get a time to cope up with this, because the system, process, even our software, so many things has to be aligned with this circular. But major part is that I will tell some outcome also from the regulator point of time. They have not taken care of our total asset, net asset, because the qualifying asset criteria, that is the major issue we are facing problem. Because this qualifying asset criteria, it was a net asset and total asset problem. When the FLD, a lot of companies going for DC for portfolio, they are putting FLDC. This FLDC has been going toward the criteria of total asset. The bank, cash balance, so that is a big problem.
That will come later about the chart.
Yeah, definitely.
So thank you, Alok. So what you are saying is that one is the assessment of the income level assessment has, to make it to 3 lakh, and the practice of assessing the income and fixing the repayment with that is one point which you are talking about, and of course the pricing part of it. Sir, so Sumit Mukherjee, you are from Arohan, and Arohan is a big brother, big player in this region. So what is your experience, and what is that you see, what are the cardinal things which has happened because of the new regulations?
See, on the new regulations, as the ability to increase the price has helped, I believe, the sector as a whole to come out and absorb the COVID losses. Otherwise, it would have been very difficult to sustain and draw fresh capital into the industry. I think that's one of the biggest positives that we have got. The second is, it has also helped the MFI NBFCs to come at par with the banks, which anyway did not have a price cap, and therefore they were at an advantage over the rest of the industry. So that's helped. Third, I think because of the price cap being removed, I think in an indirect way the RBI said that go ahead and expand the industry, because we want the funding in the industry to not come down. So I think that's an indirect kind of a message. And my view is that there is one open-ended item. So while the household income has been capped and the obligation has been kept at 1.5 lakhs, the non-MFI loans could become a problem at a later stage, because a housing loan with a longer tenure, how do you deal with it? A gold loan with a bullet repayment, how do you deal with it? So the RBI said that every board should have their own policy and they should decide. But at some point, if because of this, it ends up with the indebtedness level of the customer going up, I believe that the RBI will step in and clarify to the extent where they don't want distress to happen to the household. So it could in a way impact us negatively, where maybe the kind of lending we are doing might need to come down. So that's my view.
Can you also give your experience of the last 1.5 years of implementing the new regulations? How Arohan has experienced this change?
So, we are completely compliant, as most of the industry is. In fact, we look at the FOIR calculation the way we can do as per the regulation, but we have decided to restrict ourselves by looking at an absolute indebtedness level as well. Because we don't want a particular household to have a level of indebtedness where it becomes very difficult for them to service the EMI. Having understood that this is informal segment in terms of the income, 1,50,000 repayment cap means about 12 to 13,000 rupees per month, which is quite a substantial amount of money when you look at from a regular repayment that is required. Because informal segment by definition would mean that they don't have a regular income. There will be ups and downs. So that's why we kept an indebtedness level where we make sure that it doesn't go beyond a certain level.
And the transformation from the old regulation to new regulation?
No, it was smooth because we had enough investment on the IT side, etc. So we could put in the regulations. Of course, on top of that is how you train your people, etc. But coming as it did post-COVID, I think the industry was ready for change in that sense because we were not really at that peak level of disbursement. So the train had actually slowed down by then. So I think the transition was comparatively easier for the industry as a whole.
True. So the train had slowed down, so the transformation was smooth. So we heard from the practitioners. Let me hear from the funder, and then I'll come to the association. See, Partho, you are general manager in NABARD and have been a great supporter to this industry. Have been for a long time. Have been supporting in some way or other. As a refinancing organization or as a funding institution, how do you see this new regulatory norms? Has it given you something more comfort, or has it given some less comfort for you?
So, Sir, thank you very much, and good evening, everyone. A small disclaimer, sir, here. The views expressed by me are purely personal and not of the organization. That is one. Because having worked in this sector for quite a long years, I have experienced certain things which I am going to narrate and also express. So, firstly, sir, I think since you talked about the regulatory framework, which came into being in sometime in March 2022, and as the data says, September 23 data says, I think the loan book of microfinance sector is standing at 3.8 lakh crore, which has grown to maybe by 25-26%. So that says it all, that the sector is doing well. And I would also like to compliment that the sector is doing well. Not only doing well, it has exceeded the bank share in the entire scheme of things. So whereas bank share has come down from 40 to 31%, whereas it has grown year on year. So that is one data point which I would like to say. Second one, from the refinance, as a NABARDian or having worked in the sector from NABARD side, I would like to take 3 pointers which I have. First one is definitely the cost of fund or the cost of borrowing by the MFIs and to the end borrowers. If you see, definitely it's on a higher side. Whereas, as Mr. Sumit Mukherjee has talked about, yes, because of the COVID-19 and because of the deregulation of interest rate, it has definitely helped. No doubt about that. What about the end beneficiaries? So, if you look at that, then I have one particular point which needs to be taken into account by the SROs.
We have got, and it's shared by our two practitioners, opportunities are there. But also, sir, it has also brought some of the challenges. Challenges in terms of the first term is that pricing thing. It came. There was a cap before, and we used to abide by that cap. Every MFIs, every entities, those who were involved in microfinance operation, they used to abide by that cap. But when the cap is out, they have taken out and given a responsibility, gave the responsibility to the board to finalize or judiciously set the price, then the real challenges is there. So that way, it has also brought to another kind of responsibility to the state association to orient the board members, to sensitize the board member how best and how judiciously they should fix the pricing, because it is all now without cap, and it has given to us, RBI has given the responsibility to the board to fix the pricing. So that way, as a state association, what we did, we had in collaboration with Sadar, we made an orientation program, online orientation program, virtual one. Followed by that, we had our own virtual program with the member MFIs in the state level. And also we visited some of the smaller MFIs. Those who are, and bigger one are, there are only a few, 6 or 7 homegrown MFIs in Odisha. Out of that, remaining are of national level MFIs based at out different metropolitan cities, and they are operating there. We didn't go, but we visited to the smaller MFIs and tried to explain what this framework is. So that added one of our responsibility to association. We explained that, and in some cases we had to have the orientation for the staff on the operational aspect of the this framework. So we, detailed it out at our level. Then we went and visited the smaller MFIs and met their board, and we sensitized them on how best they should act upon judiciously to take forward this one. And the second thing is that morning the officials from RBI was telling about GRC. That we also emphasize: governance, risk management, and compliance. Whatever happens, we should comply to this new regulated framework. We encourage, advise to all our MFIs, member MFIs, to be comply with the new regulation. 1, 2, 3, 4 जो भी है उसको comply करते ही जाना है. Independence or creativity has been, you use your creativity, but you should not deviate the kind of set standard in this new framework. So that's what we went and explained them and oriented the staff on the senior management.
Thank you, Dayanji. I think you made a very valid point. In fact, with the relaxation in norms, with the new norms coming in with several freedom, there is also a need for responsibility on the part of the lenders. And as an association, whether it is state level or national level association, we have a role to play and ensure that the right kind of guidance and right kind of oversight is there, so that things doesn't go beyond out of hand. So that takes me to Sumit ji. See, the interest rate is an issue which everyone is talking about.
You can improve the credit cost also. Earlier Microfinance never seen more than 0.5 or 0.9%.
Yeah.
So that was the thing.
Right. Let me come back to Sumit once again. See, do you think anything else should have been there? I mean, some other wish list you had in the new norms, something else should have been there that would have been made better? Anything?
I think, this new framework is now 2 years old, right?
Yeah.
I don't see this as an end game that this is stopping. This is going to keep happening.
Right.
And there are other tools that the regulator has. For example, if they feel that this is getting heated up, they might increase the risk, weightage on these assets if they want to. So it's not that this is the end of it. Right. So the framework is defined.
It keep evolving.
Absolutely.
Great.
So right now they have defined the framework. Who's a MFI customer? How do you look at the household income? How do you look at the indebtedness and debt or repayment capacity? And few more could also come in later.
Lessons learned over these 2 years. What are the lapses? What are the encouraging points that we have experienced? So what has gone? A small kind of quick study or kind of assessment of our internal assessment, not like outsiders doing before. Already some concerns are being raised like interest rate and other deviations. Before anybody coming up from outside and telling to our sectoral to us, I think internally we could, as a SRO, as a state level association, we could go make a kind of quick assessment of it and see where the area, which points or which areas are really working well for us, and in which area we are not complying well, or there are they need improvement. So that kind of assessment and record of experiences, lessons learned could be helpful for us. I think together with national SRO, we can do and share that with our members, so that wherever there is need of improvisation, they can do it.
Right. In fact, that's a good point. In fact, for your information, we have already instituted a study with Dwara Research. Dwara Research and Sadat together, we have started a study to understand the impact of the new regulatory norms on the lenders as well as for the clients. So probably that will bring us some kind of insights on that. And we are also planning to have some kind of a round table so that the MFI leaders can come together and sit and discuss about that. I think time is also short for us. Any questions from the audience? Anybody would like to ask any questions?
ঋণ মুক্তি সংস্থা যে বেরিয়েছে এর ব্যাপারে ঋণ মুক্তি সংস্থা ঋণ মুক্তি সংস্থা যে বেরিয়েছে তার বিরুদ্ধে কি চিন্তা ঋণ মুক্তি অভিযান
আচ্ছা ঋণ মুক্তি Of course, that is now I think almost died down. Here and there, some noise that will continue to be there.
We have this issue. This issue came last 3-4 months before in Kendrapada district, in Odisha, in which all of them from the Delhi office, Lucknow office, Punjab office, they came and they made a lot of negative campaign against this Rudmukt Bharat. जो हुआ था तो immediately what we did, we went immediately to the district administration, met the DM, met the all other officials, DDM, DMs, and tell them that this is happening and this is going to spoil the entire credit culture of the district. Anyhow, better late than never. They reacted, responded well, and now they have, it seems, district administration, they have stopped all the offices over there. Or Sobik ji had visited there from Sadan, and we came to know that from that district there is no more kind of Rinamukti kind of a negative campaign, but they have conveniently shifted to other district, remote areas.
It's a business for them also. So they are also looking for some new business to come out, So this will continue to be there. We have been seeing it, whether it is in Vidarbha, whether it is in Sagar district, whether it is in some other, in Punjab, there are some areas we have seen how it, Hoshiarpur and all, we have seen how it has happened. So West Bengal there were some areas, so it will be there. This is a risk we have to continuously face, and we have to be ready for that, and I am sure the sector is very much ready for that. One of the issues, Sumiji, I feel that we are one of the biggest risk we have is a perception risk. What do you think? How do you think about that? Is it right?
Because we are at the the bottom of the pyramid, we are lending, and that's one of the weakest sections of the population. That perception will always be there as a corporate versus an individual. So, and in my view, the only way out is to be very sure we are completely on the right side of the regulation, in compliance. Make sure we are trained properly, we behave properly with the customer, make sure we don't disturb early in the morning or late at night. So, all these regulatory issues, we have to be completely, compliant. And that's the only way we can, survive the perception issue.
Very right. I think that's a very valid thing. Because this sector, because of the category of borrowers we are servicing, it's a very sensitive sector, and there will be something or other keep happening, and people also try to take advantage of that.
So for the individual perspective actually, so if we got some lower rate of interest, small medium company, so we can pass on to the borrower.
Thank you. In fact, first part of it, I'll ask my panelists to tell. As regards the advocacy for a dedicated funding mechanism, we have been taking up with the government. Recently, when we had our meeting with the DFS Secretary, we very strongly advocated for that, and that Secretary himself was very appreciative about that point. He told his Joint Secretary, why don't you work out something similar to the National Housing Bank scheme? I don't know what National Housing Bank scheme is. That there is some National Housing Bank scheme where some cheaper source of fund is there to support they have a dedicated fund is there. So similar, that was his reaction. I'm saying that we have been working on that. We have been talking to RBI, we have been talking to NABARD. In fact, NABARD has been requested to create a guarantee fund, and we had therefore yesterday we had a VC conversation with the NABARD officials in the head office. So, and they are also looking at bringing some kind of equity funding also.